Hi everyone, Joe Kehrig, Managing Broker of Coldwell Banker Real Estate in Danville. And this is your San Ramon Valley East Bay real estate update for the week of July 13th. So this week is going to be a lot like we've seen in weeks before. The market is still very, very active. It's trending to be an actual seller's market. And why is that? I mean, why all of a sudden? Because what we have now, the prices have surpassed where they were in February. So we are as active and the prices are as strong as they were in February, which was the best February in 13 years. There's a lot of reasons behind that. Number one, interest rates. Now they just surpassed being lower than 3% for the first time. They're as low as they've ever been since they've been recording it and doing the stats for the interest rates. That's number one. And number two is we're still dealing with the lack of homes throughout most cities and really the United States. They say the United States $1 million to $2 million homes short of what we really need. So let's take a look at some of the graphs and we'll dive into it. First off, you look at this one. Americans rank real estate as the best investment for 7 years running. Now it's funny, when you go back to 2011, gold was 34%. Way above everything else. Well, if you remember in 2011, no one believed in the stock market or real estate at all. So, and the savings account, certainly, we had banks go under and such forth. So, but you've seen real estate steadily go up and up and up. So I think that's going to continue. To see the stock market has gone down, and part of that is because obviously with what happened after the COVID-19 shutdown, it lost a little bit of its luster. And a lot of people think that it was kind of being a bubble anyway, and that bubble kind of burst. But it's coming back a little bit now, which is good. We're going to have now, they've just announcing new shutdowns going through. Governor Newsom announced them. Is that going to affect our real estate market? I don't think so. Because, again, a lot of those shutdowns are service industries. And unfortunately, in the San Ramon Valley, where our average price is $1 million to $2 million and above, that's not our typical buyer who's in the service industry. But at the same point, it's going to have ripple effects. It definitely affects those people hugely. But as far as people buying $1.5 million home, probably only affects it in a more ripple effect. So the next graph that you take a look at is, what are people thinking? What are the experts out there thinking of what's going to happen with the real estate market? So here's some long-term range for predictions on future home prices. The Mortgage Bankers Association and the National Association of Realtors, obviously, we're in the trenches, and I kind of feel like them that the market's going to continue to go up. But as you go down, you look at Freddie Mac, Fannie Mae, then you get to Zillow and Haas and CoreLogic. CoreLogic is kind of an outlier a little bit, so I'm not sure what they're thinking, but definitely for the most part, they think the market's going to stay, pretty steady. The election's going to have a huge impact on the real estate market, because it doesn't matter whether you're left or you're right. There's different thought patterns on real estate and owning real estate and mortgage deduction and tax-free exchanges. You need to do your own research on that, because if you own real estate, there's huge differences that you need to know about depending on what party gets elected. So look at the U.S. listing activity, and you see that the active listings obviously are down 27%, for June. And that's what's trending. That's why you're seeing the market so strong, because when you look at the graphs, the one thing I've always talked about, you can drop me any place in the United States, and it's all about show me the active and the pendings, and show me the absorption rate, and I'll show you where the market's going. And when we get to our graphs, you'll see if pendings are outpacing actives, well, that's basically a seller's market. Now, you will see that obviously during May and June, they were up 45% as far as new listings. Well, that's what happened when all of them hit the market. And we've been doing this now for 4 months, the show, and what I always told you, we knew that there was going to be a bunch of homes come on the market, but what we didn't know was what the absorption rate was going to be. Well, what we've seen the last month and a half, the absorption rate has been huge, and it's kept the market very fast paced. And then you see the new listings now have gone down a little bit,
kind of trending. And that's the interest rates and the lack of inventory is what's going to keep the market really strong. Pending home sale index, well, it speaks for itself. During March and April, it was down when we were in the heat of COVID-19 shutdown. And then look what happened in May, 44%. I'll bet when we look at June, it's probably even going to be higher than that because it's been so active. So if we look at the graphs, look at San Ramon Valley, and we always talked about it. Look at the pending sales. It went from 121 to 144, which means there's 23 more pendings this week than there was last. But when you add in the 7 closed sales, that's 30 pendings in San Ramon. San Ramon's not a huge area, but then look at what's happening with the active listings. We saw that last week in Danville. Now we see it in San Ramon going from 126 to 106. So what that tells you is when you start to see pendings being larger than homes for sale, it trending towards being a seller's market. And the other thing too is we talk about absorption. Well, you're seeing the absorption where the properties are actually going down, which obviously doesn't trend well if you're a buyer, because the less inventory and the more interest, prices are going to go up, and that's where we got into the multiple offers.
Now, Danville, you've actually seen Danville look last week. When you look at, a week ago, it was like 136 and 99. Danville, you're starting to see a little bit more of an evening out this week, which is great. The pending sales went from 136 to 129, but look at the closed properties, 23. So even though it's 7 less pending properties on the market this week compared to last week, when you add in the 23 closings, that means that 17 homes went pending. Now in San Ramon there were 30, but still very active market. It was good to see the inventory build up a little bit from 99 to 108, because I'll be honest with you, from our standpoint in the real estate business, we work with buyers and sellers, and markets are never fun where the sellers have a buyer over a barrel or the buyers have a seller over the barrel, and it seems like it shifts from one to the other. Well, what we've seen the last month is we've kind of seen a pretty even market, but now it's trending more a little bit to be a seller's market. When you look at Blackhawk, same type of thing. Pending properties have stayed pretty consistent. Active properties have stayed pretty consistent. So it's just a healthy, this is a type of market where if you're a buyer, if you're a seller, if you have a nice home and it's priced well, it's going to sell. If you're a buyer, you can actually go out and have 3 or 4 homes to choose from. So it's pretty much an ideal market, from both a buyer and a seller type standpoint. And then we look at Alamo. Same type of thing as in Danville. You saw that the pending sales went down a little bit, but the active properties have stayed pretty consistent. So just like when you see a situation like this where, the actives are here and the pendings are here, it's a pretty healthy market. When you get to a point where the pendings start outpacing the actives, like you're seeing in San Ramon and Danville, and you also see in Dublin coming up, that's where it's getting to be more of a seller's market. I mean, look at this. The pending sales from 117 to 112, that's 5 less, but with 22 closings, that means that there were 17 properties that go pending in Dublin. And you see the good part is from 2 weeks ago, the inventory is way down, but now it's starting to hold steady a little bit. So the hope is the fact that we can keep the pending sales and the active sales fairly even. We don't want active sales way out here and pendings just a few, because that means the buyers are going to start holding the sellers over the barrel, and vice versa. If there's hardly any actives and a lot of pendings, then obviously the sellers are going to have the benefit of that. So right now, I would say the markets are strong, maybe trending a little bit more to the seller's favor, and especially in Danville, San Ramon, and Dublin, but still inventory out there. If you're a buyer with interest rates 3% or less, here's what we're telling people. Are saying, Joe, what do you think with the uncertainty maybe in the market with the election? I would say I would be a buyer in this market, but I would be a smart buyer. Don't get in a bidding war and pay more than what you feel that the home is worth. But if you find the right home at the right price, I would definitely buy it, because if the market does slow and interest rates go up, you'll be paying the same out of pocket as you are now anyway. So again, if you want any other information,
on your particular neighborhood, your particular, home, because everything is so neighborhood centric. Even within Danville, one neighborhood compared to another one. So if you want any other information or more information, no obligation, on your particular home, give me a call. My number is 925-487-6838. One slide I forgot though before we finish is the list price to sold price percentage. And you can see what we talked about, San Ramon, Danville, trending over 100% of asking price. Things are going for more than asking. And you go down to Dublin, it's about 100%. It's always been trending around there. So you see, remember what I talked about where it's definitely trending to a seller's market? You can definitely see that where things are going for 100% of asking or more. And then where you see a little bit more of a market where there's still a good supply, but it's an active market but not trending to sellers, there's a few percentage points as far as negotiating room in those prices. So this really follows the graphs almost perfectly. So anyway, as I mentioned before, any other questions, 925-487-6838, or send me an email, joe.kehrig@cbrealty.com. Have a great week, be safe, and may God bless you, and may God bless your family. Talk to you soon. Thanks, bye.